Okay. Okay, sound seems to be good. I think. I hope. Thanks, Mudasar. Okay, audio seems to be good on my side. We can get started. Welcome back, everyone, to another educational session, and this is going to be Ichimoku Kinko Hyo, and this is going to be very dear to me. This is something that I actually use and found success in. When it comes to my trading, when I found this out, I delved deep into it. This pretty much changed everything in how I actually look at the market. Okay, so it's going to be Ichimoku Kinko Hyo, and as I promised to pretty much everyone, you don't actually need all the previous webinars for this one. You can actually jump into this, and like Mudasar, this is your first time you've been enjoying the previous weeks. That's great. This is going to be great because this is pretty much, if you have zero experience, you can start with tonight's session. Okay. Audio seems to be good. Yeah, audio is good. Philip still can't hear me. Thanks, Daniel. That's a really good feedback. I really love it. Malaysia, how are you, Malaysia? Okay, so my name is Vito Henjoto, and we can get started. Some of you guys requested for a market update as well. I'll just briefly touch on it before we start. But just to begin with, a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account any particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. We do not offer signal service, managed funds, or other personalized advisory services. Please be aware of scams that promises guaranteed returns or managed accounts. CFDs and Forex are leveraged products that carry high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay, so alright, so how's your trading week, by the way? So I'll just do a quick update on what's really going on in the market. So we have that CPI numbers out yesterday. It was a super volatile week. In fact, I think yesterday was one of the most volatile days in my trading career, especially if you trade the equity market. Yesterday, it was quite a bit of a storm, okay? But in any case, pretty much everything pre-CPI was still in line with what we were observing. Just a few quick updates as well. If you guys are wondering what happened to the pound, was it suddenly dropping, why it was pushing up yesterday, I'll just quickly touch base before we begin so everyone gets to know, or at least anyone that's curious about what's really going on yesterday with the pound. So they would talk about a potential U-turn, right? And the finance minister that was actually in the G20 meeting in Washington was actually called back. That causes a rumor that they're actually going to make that, the fiscal cuts a little bit quicker. But then we just got news. I think this is pretty much just in the past half an hour or so. A guy has been fired. So yeah, pretty much the finance minister that in the UK that causes the whole thing pretty much just got fired right now. That's basically the rumor that was out from BBC. Anyway, we can get started right now. Okay, back to topic. Anyway, we are going to be talking about Ichimoku Kinko Hyo. Ichimoku Kinko Hyo, or just Ichimoku for short, it roughly translates to one look equilibrium chart or quick look balance chart. So basically, by looking at the chart, you should immediately find out what's really going on in the market. This is a research that was actually developed by Hosoda Goichi, which is a journalist, a financial journalist. He's not a trader. Okay. It took him 30 years to perfect it before releasing it to the public. So this started in the 1930s, got published in the 1960s. So basically pre-war and post-war era, that's basically the research that was undertaken. It is moving average based if you want to base it on the Western system. It's not really directly correlated to the Western system, but if you want to look at it, it is going to be based on a moving average system. It's normally applied, is actually designed for the daily and the weekly chart, but we can also apply it to the hourly chart and the small time frames as well. It is a very, very quick way to identify the position of price in the market. You can actually identify where it is in the market, whether it's in an uptrend, downtrend, sideways, the sentiment in the market, and future resistance and support levels. So this is super, super useful, especially for me as a strategist, as an analyst, as a trader. When I was still working for in the market, it was basically full on every day. I have to be looking at hundreds of different instruments, and this is really a time saver skill that I picked up. Okay, so Ichimoku is unique as it technically consists of several indicators. It's actually 5 wrapped up into one. And what's unique is that every single part can actually be taken apart and used independently. We are going to be looking at the Ichimoku Cloud tonight, but we will go through the components, because if I don't go through the components and you don't filter out what you're trying to look at in the chart, this is what Ichimoku Kinko Hyo is going to appear to you. And for everyone that looks at Ichimoku for the first time, they're gonna look at it and say, like, what am I supposed to see? It's all so messy, it's scribbled in there. How am I gonna look at the market clearly, right? So this is Ichimoku Kinko Hyo with all of the components turned on. And I don't normally have that on, and I'll explain a little bit later on why. It takes time for you to actually understand the whole mechanics of this. Not sure if we have. No, next week is still okay. The third part, I'm not sure if we are doing the third part of the Ichimoku Kinko Hyo this time around. I think not, because the third one is actually really, really hard, and it takes time for you to get there. So we are gonna go with strategies next week, but this week I just want to show you what Ichimoku is, what is a component of the Ichimoku Kinko Hyo, what are the settings, how do you actually apply it to a chart, and get started today. Okay, so this is Ichimoku Kinko Hyo in its complete form. It is very messy, it is very jumbled. Okay, but we will start with the Tenkan Sen and the Kijun Sen. We have the Kijun Sen, which is the baseline. So Kijun is Japanese for base, therefore it is the baseline. It is calculated by the highest high plus the lowest low divided by 2 for the past 26 periods. Now, I'll explain later on why that number 26 keeps appearing and why Goichi uses 26 as the base for it. Okay, Kijun Sen is going to be slower and it will trail the Tenkan Sen. Tenkan Sen, or the conversion line, or Tenkan in Japanese, it's basically to convert or divert, right? It's calculated by the highest high plus the lowest low divided by 2 for the past 9 periods. So we're looking at 26 and 9. And if you know your MACD, this is going to sound very similar, right? I don't think it's designed in the same way. It's going to look very, very different. But we are looking at the same period here, which is 26 and 9. Since calculated using the only 9 periods, this is the fastest and most sensitive line to price within the Ichimoku. So there's a lot of lines in the Ichimoku. We'll talk about the Kijun and the Tenkan first, because both the Kijun and Tenkan are often used as short-term support and resistance. Another A5 Wagyu. Okay. All right. So this is what the Tenkan and Kijun looks like. It looks like a moving average that moves really, really weird, because it can actually go flat. The Kijun Sen does go flat a lot of the time, so you are actually looking at it looks like a moving average crossover, but it's not. Let me go through the questions first. Okay, found difficult Ichimoku in multiple time frame analysis. We are actually going to be using. I'm actually going to show you an example on how I actually use it on multiple time frames. And once you get the key idea, it's actually not really, really hard. Okay, So this is anyway. This is the Tenkan and Kijun Sen. Don't worry about it because you should know what it is, but we will only talk about it next week. So we'll come back to this one next week. Okay, so, but this is the Tenkan and Kijun Sen. Next up is the Senko span. This is really important. Senko means preceding or going first in Japanese. It is also designed to indicate changes in the market's trend, right? Now, we need to talk about the Tenkan and Kijun Sen first because to get Senko, we actually need to average the Tenkan and Kijun, right? Once we get the average, this is something that's probably going to be really weird for a lot of you. It's shifted forward 26 periods, all right? And then the Senko span B is basically the average of price for the past 52 periods shifted forward 26 periods. So we are actually not going to be using this now. It's actually going to be shifted forward 26 periods. Now this gives an advantage to Ichimoku Kinko Hyo, where whatever cloud formation that we look at, whatever support and resistance that we looked at, those were actually drawn 26 periods before price even gets there. Okay, so let me just pull up the chart here. Let's see what we can pull up. Anyway, I'll use MetaTrader. This is going to be the same with MT4 or MT5. Hold on a second. Okay. Right, I'm using MT5 right now, but if you have your chart like that, under indicators, under trend, you will have Ichimoku Kinko Hyo. All you need to do is just drag it in there. Do not change the settings. All right, it's going to be Tenkan Sen 9, Kijun Sen 26, Senko Span B is 52. So the settings that you are going to leave behind are 9, 26, and 52. Okay, in terms of colors, we can tweak it. I'll load it out first. Right, this is what it looks like. Okay, if you want to hide it, just double click it, change the colors to none for the Chikou. Kumo, yes, you want to leave it there, but I will actually I'll turn off the Tenkan and Kijun Sen first. We'll just need a cloud. Okay, so what I was trying to say is this. Look at where price transition across the Ichimoku Cloud, like this one, like this area here, where it actually found a little bit of resistance and support. Look at that area. When price traversed that Ichimoku Cloud, it was actually pre-drawn. It was actually drawn when price was still down there. So we are looking at potential future support and resistances. Like right now, for the pound USD, we are looking at a little bit of a support coming in at 1.1150. That's basically the base of the Ichimoku Cloud. This was pre-drawn, right? Price hasn't even got there yet. We already have that key levels as our potential support. So this is what makes this unique. And this is what makes Ichimoku really, really interesting. Okay, so that's Senko A and B. Because you will need the Senko A and B because that's how you actually get the Ichimoku Cloud. And this is going to be the topic, the topic of discussion for tonight. The Kumo or the cloud is the area between two Senko spans. The Kumo is not just a visual indication of trend. It also will act as a strong support and resistance area. Now, when price is inside the Kumo, it is trading in a ranging market. And Kumo is really probably the most popular component in Ichimoku. And everyone that started out with Ichimoku Kinko Hyo, when they want to learn about Ichimoku Kinko Hyo, or when they talk to traders about it, they will talk about the Ichimoku Cloud. Some people just use the Ichimoku Cloud, and I'll show you how to actually use the Ichimoku Cloud if you want to for your trading. And I think it's a great area for beginners to pick up Ichimoku Kinko Hyo by just focusing on the cloud. There's a little bit of a name play here. Kumo, it's cloud. Kumo is also spider. So yeah, if we have price going inside the Ichimoku Kinko, the Ichimoku Cloud, The wordplay here is that if price gets inside the cloud, it's too cloudy to actually see the direction. Get the idea? So it's actually also going to get stuck because it's like getting stuck in the inside the spider's web. So that's basically kind of the wordplay that we have here with Kumo, but it makes things easy to understand as well. Okay. So this is going to be really familiar because I have this pretty much in all of my charting. No matter what I use, if I want to use pivots, if I want to use fibs, I will have Ichimoku Kinko Hyo, especially the cloud, in there as part of my charting. I just cannot trade. Once you understand it, you'll get it as well. It's going to be really difficult to not use Ichimoku Cloud going forward. Okay, it just makes things a lot easier. Okay, so that's the Ichimoku Cloud. Now the last component that we have is Chikou. Chikou literally means behind in Japanese. It's basically simply the current market price shifted back 26 periods. So the purpose of this is to give you a comparison between what price was 26 periods ago compared to the current market price. So this will become your sentiment indicator. If Chikou was if price was higher than the Chikou 26 periods ago, then we know that the sentiment is in bullish. If price is actually below Chikou, then we know the sentiment has turned bearish. So you can see that's the scribbly line that's following price. It's basically price just shifted back 26 periods. Okay, sorry, let me just pause for a little bit. Sweating a little bit here. Okay, too excited. Anyway, this is the Chikou span. I personally don't use the Chikou span unless I use Ichimoku Kinko Hyo as a whole system. But it's really very rare for me to actually look at the Chikou span unless I really want to check out what the sentiment is in the market. Screen's not clear. I'm streaming at more than 1080p. I would love to stream at 4K, but then you guys can't see anything. Okay, so this is Chikou. Okay, good to know. But personally, I don't use it. So yeah. Okay, let's talk about Y26. So Ichimoku was created in the 1930s to the 1960s, right? So there are roughly 26 trading days in the month. Still have Saturdays as a work day. So if you consider 30 days as a month, you take away 4 Sundays, it will be 26 when viewed on the daily chart. When you do 26 on the weekly chart, it actually reflects half a year, right? So 26, 52, get it? 26 is half a year, 52 is a whole year. 26, when we view it on the hourly chart, it reflects approximately about 1 day, right? So the last part is kind of the modernization of Ichimoku Kinko Hyo. But this is the reason why we actually use it on the daily. It was actually designed for the daily and the weekly chart, but we can accommodate it to be adjusted to the hourly chart. About 15 years ago, there were some modern traders that actually tweaked the settings, and I've tried it out. A lot of the Westerners, when they come across Ichimoku Kinko Hyo, they kind of adjust it to the current trading system. And I can tell you straight away, the results is like night and day. It's so different. The new adjustments are pretty much useless. So stick to the original settings. It took Goichi 30 years to do it, right? A lot of research is done here. A lot of students are helping out the research. So stick to the original settings, all right? But if you want to know why 26, this is how it comes about. Okay, so back then 6 trading days, 6 working days, take 30 days a month minus 4 Sundays, you get 26. 26 on the weekly chart is half a year. 52 that we use for the Senko is 1 year. And then 26 when viewed on the hourly chart reflects approximately 1 day. Okay, so we want to focus on the Ichimoku Cloud. Ichimoku Cloud is a very versatile tool. It is actually a trend detector. we have a little bit of a homework going on. I'm going to give out a question at the end of the session. You guys can come back next Wednesday when we talk about the market, and I'll give you the answer, or you can come in on Friday next week and we can give you the answer there as well. Okay, but Ichimoku Cloud itself is actually a very quick way to scan the market at the start of a trading day. Okay, so let's say if I would just wake up and I want to look at the chart, what's really going on, what happened last night with the CPI and whatever and whatnot, I will look at the Ichimoku Cloud, and I will look at the positioning of price, whether it's actually above, below, or inside the Ichimoku Cloud. And then that's how I actually skim through a lot of the instruments every day to actually find one that's really interesting by just using the Ichimoku Cloud. Okay, I like using the Ichimoku Cloud just by itself because it works with traditional Western technical analysis. We're not dealing with Western technical analysis here. We're dealing with Japanese technical analysis today, right? The Ichimoku Cloud is because it's trend, and we all know when we discussed trend earlier in the series that trends are actually time frame specific, but we can actually use this to filter out different time frames as well. Okay. But what's really important for me is that it provides you with an insight into potential supports and resistances in the future, and that's what makes it interesting. Okay, so what do we need? You will need to have access to Ichimoku Kinko Hyo, which all of you guys should have access to Ichimoku Kinko Hyo if you're using MT4 and MT5. It's a pre-built indicator. The settings are 9, 26, 52, 26. Do not change this. Do not tweak around. Okay, at this stage, only the cloud is needed. So Tenkan, Kijun, Chikou can be hidden from view. I'll go back to the MT4 again if you want to hide it. Go to colors. For the Tenkan Sen, just switch it to none. Kijun, none. Chikou, none. Up Kumo, down Kumo, change it to whatever makes you comfortable. Okay, I like blue as up, so I'm gonna change that to blue. This one down. Okay, there we go. Okay, so change it. At this point in time, we don't actually look at the color, but if you want to look at the color, go ahead. Tweak it if you want to. We'll talk about what that color means next week when we talk about trading strategies with Ichimoku Cloud. Okay. So that's how you do it. If you missed out earlier and you just joined in, go to indicators on your MetaTrader. I believe it should be under trend. That should be Ichimoku Kinko Hyo. All you need to do is just load it up, and then you can just change it. Okay, turn the Tenkan, Kijun, Chikou off. The up Kumo or down Kumo is actually the Senko span, so don't turn it off. You need to have the cloud there. Okay. All right. Going back. Advantages for this one. If viewed correctly, this is a fast way to determine market position in an instant, right? I don't need to know that higher high, lower high, whatever, to know what my trend is. I can look at the positioning of price and in relation to Ichimoku Cloud, and I would be able to figure out whether a market is actually in an uptrend or a downtrend. There are a few reasons that we are going to talk later on, but for today, this is the fastest way to look at, whether a market is in an uptrend, downtrend, or sideways. Super simple. It also provides you with an insight into future support and resistance. There are disadvantages. It's designed for a longer view of the market. Initially, it was designed for the daily and the weekly chart. We can adjust it to the hourly time frame. Can we use it on the 15 minutes? Yes, we can. Can we use it on the 5 minutes? Yes, you can. It's just that there are going to be different strategies that are going to be applied to it, which we will talk about it next week. Okay. If you use it on a small time frame like the 5 minutes, 15 minutes, 1 minute, it's prone to whipsaws on the shorter time frame. So the lowest I would actually really go is 1 hour. Sometimes I'll look at the 15 minutes, but to me, to suit my trading style, I'm happy with 1 hour Ichimoku Kinko Hyo. Okay. The other disadvantages is that this one doesn't provide you with an optimal entry point. You'll look through it. Once you figure it out, you'll actually look at it, and if you follow through the Ichimoku Cloud transitions, it's not always the best, because for it to actually break the cloud, right, in terms of resistance or support, typically it goes beyond a 61.8 or 78.6% retracement in the market, so it'll actually break those levels before transitioning, so it doesn't provide you with an early entry into the market. Okay, so this is really good if you are a trend trader. We will talk about some strategies on using it on a shorter time frame next week. You can adapt to it, that's completely fine, but it will not give you the optimal entry point. Okay, all right, so we are going to talk about implementing Ichimoku Cloud to detect trends in the market. All right, detecting trend for Ichimoku Kinko Hyo, it's simple. It is a very popular trend indicator in Japan, rapidly gaining popularity in the Western world. I worked in Japan before, and I work for a Japanese company as well, so I know pretty much everyone uses Ichimoku Kinko Hyo. And you know, when I was learning about this, you know, a lot of Japanese traders actually found success in trading, and if you want to know, about 85% of them are actually housewives that trade Forex specifically. Pretty much everyone just uses Ichimoku Kinko Hyo, and yeah, probably it helps with whole psychological issues when it comes to trading as well. Okay, anyway, it is designed to be used on the daily chart, and the way to look at it is super simple. If price is above the cloud, it is an uptrend. If price is below the cloud, it is a downtrend. Okay, to get in and out using the Ichimoku Cloud, so you can actually, this is the shorter time frame, right? You can actually trade off the clouds in a shorter time frame, such as 5 minutes and 50 minutes. Entries basically confirm close above the cloud for a buy and below the cloud for a sell, and you don't get out until you actually see the reverse happen. So if you buy something because price is above the cloud, you don't actually close the position until price actually closes back below the Ichimoku Cloud. So let me just give you an illustration in a minute. Okay, so you're just flipping around with every time it transition above or below the Ichimoku Cloud. 15-minute time frame gives you a good balance of market movement and much less whipsaw. 5-minute time frame is commonly used as a re-entry method or a quick scalping entry. I don't really recommend the 5 minutes one because to me the risk to reward ratio just doesn't click. Maybe it's just me. If you guys are okay with short-term trading, you have your own risk to reward ratio to figure out you've got your own money management. As long as you got it pat down, then it's okay. Okay, so the entry and exit strategy doesn't work on the 5 minute time frame. It's just that because we don't have that range in the 5 minute time frame. Let me give you an illustration on this one. So this is on the hourly time frame. I'll switch into the 15-minute time frame. There we go. So if you are trading on the 15-minute time frame, sorry, let me just turn this off first for a minute. There we go. Okay, I'm so used to TradingView. Okay, right. So let's say you take a look at this one here. There's a little bit of a transition above the Ichimoku Cloud here. If you're thinking of going long, you would have kept your long all the way down until about here. So it's not really optimal, right? You're not really jumping in at the earliest point, and there are whipsaws because price actually goes up and then down. So look at this one here. We transition above and then it came back down below. So there's a little bit of a whipsaw going on. If you were to buy there and then get out here, you're going to be about break even. Okay, but if we take a look at this one here, it's okay. It is quite a distance. It is about 95 pips or so. All right, so there we go. So you have gotten there for a long on a close above the Ichimoku Cloud, and then you get out when it comes back below the Ichimoku Cloud. The problem with 50 minutes, and I don't trade on the 50 minutes, is because I just don't have time to look at the chart every 50 minutes. Okay, but it can be done on a shorter time frame. It just doesn't suit my trading style. Okay, anyway, so this is basically what happened. If we have a transition, price goes down. That's basically when you want to get in. It also shows you that once price transition below the Ichimoku Cloud, it's actually really hard for it to reverse it if this trend is really strong. And to give you an example on this one, we have the Pound USD, for example. It's still there, right? If you want to know, this is on the daily. The transition below the Ichimoku Cloud happens all the way back in 24th of February 2022, earlier this year. And this is on the daily. So if you were following through, and this is the reason why I keep insisting that the US dollar is not really done yet, because we have such a strong trend pretty much for the whole year, right? So basically my point of view since earlier this year, no, actually since late last year, was actually for a strong US dollar. And I keep warning pretty much every trader that, it's not quite done yet. Why do I have so much confidence on it? Because I trade based on the Ichimoku Cloud. And the Ichimoku Cloud transitioned below the Ichimoku Cloud on the 24th of February 2022. And the only time it actually came back up to the Ichimoku Cloud itself was actually at 1.23, and that was listed as our resistance as well. That was in June to August 2022, that area over there. Okay, so this also applies to Euro USD. If we look at the transition below the Ichimoku Cloud, it actually happens on the 15th of February 2022. And so far, we are such in a strong downtrend. We haven't actually break above the Ichimoku Cloud. There are going to be tricks on how to actually look out for them next week if they're actually going to transition, but we will leave that for next week. But this is easy, right? I mean, if I were to wake up today and I want to trade the Pound USD, or maybe I haven't looked at, give me something, all right? Pound New Zealand. I haven't looked at Pound New Zealand for a long time, right? And I jump in, I look at the market today. Oh, the hourly time frame, it is above the Ichimoku Cloud. But when I wake up, it's probably too far back up. And then we look at the size of the Ichimoku Cloud. Don't forget that the cloud has actually been drawn 26 periods before price comes to it. So right here in the next hour, it's going to touch the Ichimoku Cloud. That was actually drawn yesterday, 2 hours before now. So 26 hours before now. This was actually drawn yesterday, pretty much before that CPI number comes out. So what does this mean? If you take a look at the cloud, what does it mean? Does it tell you something? Yes, it does tell us something, because the thickness of the cloud itself is going to let us know if it's easy for price to transition. Like this one here on Sterling New Zealand, it's so thin, right? It can easily transition. That's it. Nothing to be said about it. But if I were to pick something else, for example, what should I go for? Dollar Swiss. All right, Dollar Swiss. We are above the Ichimoku Cloud. So if this was to go down, it's actually going to be harder to break the Ichimoku Cloud because the Ichimoku Cloud is thicker. Right? It's thick. Compared to Pound New Zealand, where it's actually really thin. You can just transition easily. Does that make sense? Right? So we'll talk more about the thickness and whatever in more details next week. But just to give you a heads up, okay, we could see the pair transition below the Ichimoku Cloud. And can it be done easily? At this point in time, yes, because the thickness of the Ichimoku Cloud is pretty much non-existent. So whether or not the Ichimoku Cloud is thick or it's thin, that gives out whether it's going to be a strong support or resistance. Because if I were to zoom out and to show you when they transition, it's actually typically around areas where it's actually really thin. In an area where there's a thick cloud like this one here, it actually just stays inside the Ichimoku Cloud and it transitions that way. Okay, so the thickness matters. We will talk more about it next week, but just to let you know, the thickness matters. Okay, because the thinner that cloud is, the easier it is for market to transition. So if you were expecting a market to turn from a downtrend to an uptrend, then you want to look for the areas where the Ichimoku Cloud is actually really thin, so that price can just transition across easily. Okay? Hopefully that makes sense. All right. So how do you implement this with Western technical analysis? Because if we take a look at just understanding, oh yeah, it's above, it's below, we want to go in, we want to go long, we want to go short just by the Ichimoku Cloud transitioning, it's very prone to whipsaws, right? Because it detects it late. For Ichimoku Cloud to confirm that a certain trend has changed, that means there must be a retracement that's beyond 78.6%. and in towards a potential extension before it confirms it as a change in trend. So the law still apply. The higher high, the lower low for a trend, that still applies. All right, higher high, higher low for an uptrend, lower low, lower high for a downtrend. That all still applies. It's just that we don't look at it if we use the Ichimoku Cloud, but behind it, it does still apply. All right. And for a market to create that higher high or lower low, therefore, you're not going to get a good entry because you are going to go beyond 100% in terms of retracement. So that's kind of the problem with just using the Ichimoku Cloud. Okay, obviously, if we take a look at next week's material where we talk about the Kijun and Tenkan-sen, if you use natively, it will help you. But I'm not going to bring out my Tenkan-sen and Kijun-sen right now, because if I were to bring it out, this is going to be a 3-hour session, and then you guys are not going to learn anything, okay? So, for example, if we're done with the cloud today, how are you going to apply all this technical analysis stuff? Are you going to be using Tenkan and Kijun-sen for your entry? No, we are actually going to use traditional Western methodologies, which is widely accepted and understood. All right, and even simple naked trading methodology, support and resistance breaks, that when coupled with Ichimoku can actually supercharge your trading a lot. Alternatively, those familiar with other trading entries such as simple moving average crossover works with Ichimoku. So if you want to add Ichimoku to your MA crossovers, by all means do it. Okay, the basis of Ichimoku is not that much different from MACD. We talked about this earlier. One of the key differences is that Ichimoku falls into price-based analysis, while MACD is significantly lagging, and it is considered indicator-based trading. Okay, so Ichimoku Kinko Hyo has a very unique position in the market. And when we talk about technical analysis, there's always going to be two camps, right? I think we did talk about this a few weeks ago, but we have one that studies the price action, right? It's going to be price-based analysis. Fibonacci is price-based analysis. New York Open or UK Open breakouts, those are price-based strategies. Support and resistance breakout, those are price-based strategies. Flags, patterns, triangles, you name it. Anything that has direct impact, if price have a direct impact on those indicators, it's going to be price-based, right? The indicator-based one is like stochastics, moving averages. Pivot is actually price-based, so don't bring pivot in. What else? RSI, CCI, MACD. Those are going to be indicator based, right? So this is the two camp of studies. Now, if we take a look at Ichimoku Kinko Hyo, it looks like an indicator based, right? Because we have the Kijun and the Tenkan, and then we have the Chikou. We have all these graphics in the chart. We have about 5 lines. All of them are actually calculated based on price and reflected immediately on price. So this is where it becomes unique. The calculation method would fall under an indicator based study, but the application is actually on a price based study. Yeah, so we have whatever is applied onto the chart, but we look for price transition across the chart. It's not like moving average transition, and you might actually say, yeah, it could be like moving average transition, but there are a little bit of a play here, because remember that the calculation for the cloud was actually whatever it is right now shifted 26 periods ahead, and this is what makes it unique. Okay, because a month from now, I'm looking at this pound New Zealand. If I were to expect pound New Zealand to go back down, where do I actually find support, right? I can highlight this area over here, because that's the Ichimoku Cloud support that was given, right? That's the area over here, right? Does that make sense? Now, if I were to combine it with Fibonacci, we look at AB, right? Obviously, the swing high and the swing low. Okay, that area where we actually found potential support is actually between 50% and 61.8%. It actually falls pretty much at a psychological price level at 1.91. Okay, then it will actually be a range between 1.92, 1.91 to 1.9. Now, I don't plan for pound New Zealand as an example. In fact, if you guys can shout out anything, I will look at that as an example. Okay, and I will look at that as an example. Just so you know that this can actually be applied pretty much in an instant, right? I'll try my best. You want to be perfect on this? No worries. We are going to guide you. And you know what? You have my session pretty much on Wednesdays, right? That session is not just limited to me looking at the market. If you have any questions regarding your trading, you can actually ask questions there. So if you have anything on Ichimoku Kinko Hyo, this is something that I actually use every day. This is something that actually changed my career in trading. This is how I changed my perspective in trading. So I actually really find this really, really interesting. Okay, so we've got a request for AUD/USD. So let's take a look at AUD/USD and see what we can actually find out from AUD/USD, right? So AUD/USD, I will look at it from the daily time frame first. I will remove everything. So on the daily time frame, we know this is currently within a very, very strong downtrend, right? That's what we can tell from the Ichimoku Cloud, okay? Now, how do we actually fix this? How do we actually apply all this? Obviously, with the Ichimoku Cloud, you're not actually going to look at anything. But if I were to give you a baseline, a conversion line, that is the Tenkan and the Kijun-sen. It gives me a little bit of a guidance here. Take a look at the Tenkan-sen and the Kijun-sen. We will talk about this next week, so really don't, if you attended this session and you don't attend next week's session, you're going to miss out a lot, right? We are actually going to look at that as a potential short-term resistance, and the blue line is actually going to be the medium-term resistance for the AUD/USD. So let's say the AUD/USD found support at 62 cents. This is how I actually look at the market, right? So I wake up, I look at AUD/USD. I got nothing planned on this one, although it's not fair because I actually did my research on the AUD/USD pretty much every day. But let's say you just look at it. Okay, we want to bring out our psychological price level, right? We want to bring out our key level, which is 62. 62 basically was the support of the range. This was mentioned on the outlook on Monday. We were looking at support at 62. That was from Monday, right? How do I figure out, all this potential supports coming in through, right? So we look at 62. If now take a look at what the Tenkan Kijun is basically saying. We are really far away from the Ichimoku Cloud. So the closer it is to the Ichimoku Cloud, you don't need to worry. But the further away it is from the Ichimoku Cloud, you are going to have to worry. Okay, that's where this can give you an insight into an overbought, oversold condition as well. So Ichimoku Kinko Hyo actually will be able to give you that oversold, overbought market condition as well. But notice the gap, it's gotten wider, right? It's getting further away from the Ichimoku Cloud. So the further it is from the Ichimoku Cloud, then there's a likelihood that it could potentially come back up to the Ichimoku Cloud. Now, if we take a look at the potential resistances on where could this come back up to, right? We will talk about time, because time is a huge factor with Ichimoku. But again, time in Ichimoku, in a cycle of an Ichimoku, it's a very, very complex study. You really don't want to dig that. I had a group of we actually talk about this in OctaFX webinars, and a lot of people just found it really useful, but they kind of about to give up on that. So time is really important in Ichimoku Kinko Hyo, right? Time is very, very specific. We use time. We use the 26 periods. This is going to be very useful. But assuming I don't know anything about what's going on, then I will look at a potential pullback by the market to those Ichimoku Cloud, right? It's very simple. I could potentially be looking at that because that's kind of in line with the Kijun Sen. But again, let me hide this. I don't want to confuse you. We'll talk about this next week. All right. So we got one down. How about we draw a fib? Do we get anything at that point of resistance? We get 50%. So we can now project if price goes above 63.50 on the daily, it could potentially continue towards 65.50 because we have a projected potential resistance on the Aussie USD on the daily. Okay? So that's how we look at it. So how about we take a closer look on the hourly time frame? What's really going on here? Do we have anything on the hourly time frame? Let's take a look at it. Okay, so on the hourly, price is actually within the Ichimoku Cloud. Is it easy for price to transition below the Ichimoku Cloud? At this point in time, a little bit tough. It will need to break below that 62.30 level. So we look at the Ichimoku Cloud base over here, and we say, you know what? I'll look at that. That's the limit. Because if there's an hourly close below that, it will transition price below the Ichimoku Cloud. Then it could potentially become a downtrend again. So it's as simple as that. So with the Aussie USD, what's my conclusion on the Aussie USD? Aussie USD, if we take a look at the hourly time frame, we pretty much have a movement below the Ichimoku Cloud, right? We transition below the Ichimoku Cloud. We have a little bit of a pullback above the Ichimoku Cloud, but immediately price goes back inside the Ichimoku Cloud. So if the selling pressure is strong enough to push price below 62.35 tonight, then it will likely resume the downtrend to the downside. Okay, that's basically how we look at it. It's as simple as that. And in terms of whether or not it could transition below the Ichimoku Cloud, can it transition? If it happens within a period of, see, this is where it's unique because you can actually figure out where it's actually really, really thin. So in the next 10 hours, if it does transition below the Ichimoku Cloud, then the potential is there. Okay, the further it is, the thicker the cloud is going to be, then price could actually do this. If price doesn't transition, price could actually do this and potentially bounce back up. Okay, simple as that. But if price is inside the Ichimoku Cloud, we don't want to touch it. We don't want to touch anything that's inside the Ichimoku Cloud. So if price is touching the Ichimoku Cloud, we would consider that as a potential range-bound market condition or potential sideways market condition or potential short-term confusion in the market. You want to stay away from that. Okay, so it's really simple. Let me just show you an example on how to actually scan the market. If I take a look at the Aussie USD 1 hour, That was inside the Ichimoku Cloud. No go for me. Aussie Yen, no go for me because it's a little bit too far. Let's take a look at Aussie CAD. Aussie CAD, I'm potentially looking for a little bit of a pullback. I'm looking at potential support to happen here, because if we go by and we combine it with Fibonacci, we'll look at 50% and 61.8% as potential support level for our Aussie Canadian here, because that's in line with the Ichimoku Cloud. It's also in line with the 50% and 61.8%. So I'm not expecting price to bounce back up right now. I could potentially see price pull back down a little bit towards 86.50 and before it bounces up. So if you're looking for a long right now, you don't really want that. If you're looking for a sell, then you want to be looking at those potential support level as your exit levels. Does that make sense? Okay. All right. So anyway, let's get back. So you can combine it with other trading methods, right? So for example, this is the Tenkan and Kijun Sen, and also moving averages. It will look like that. You can use moving averages to confirm your entry once price has transitioned above or below the Ichimoku Cloud. You can use a simple breakout like this one. I can take a look at the blue line and the red line. That's basically capping the breakout. Price is below the Ichimoku Cloud, so it breaks to the downside. I'm shorting, right? And I have a new range again, and I short again, and it adds up from the initial position that we have on this one here, the initial first break below the Ichimoku Cloud. Okay, this is basically how I navigated the Euro USD to Pound USD pretty much the whole year. It's basically using simple stuff like this. All right. Every time it breaks to the downside, we want to add our short position. Break again, we add our short position. Break again, we add our short position, and it just adds up. And this is how you actually trade the trend. And this is basically what it is going forward pretty much the whole year for the Euro USD or the Pound USD. It is like that, right? We actually have that transition below that Ichimoku Cloud, and every swing low that you draw, that would be a break, and that every break will be an entry. So think about, you're gonna hate yourself for this, because once you understand this, once you're done with this session, you're gonna look at the chart and you're gonna look at how many missed opportunities there are in the market just by looking at this. Okay, it's going to be life changing for a lot of you. Okay, anyway, go on. So we can just keep on adding trades as long as it's actually below the Ichimoku Cloud. We look at continuously looking for a potential to sell, and that's basically the same current situation with the Euro USD, the Pound USD, and whatever, right? That's why my thoughts hasn't changed, even with the whole volatility yesterday. Yesterday was one of the worst days in a long time. I would say yesterday would actually count as, in comparison to the global financial crisis, it was one of the most volatile day in trading. Okay, so we can use a simple trendline breakout as well. So you can use that. So you can draw a trendline breakout. You can trade that on the trendline breakout. No issues at all. You can use moving averages. This is exponential moving averages. You can use that. So it's a downtrend. Every time the EMA crosses down, you go short. Every time EMA crosses down, you go short. EMA crosses up, you don't go long because it's actually below the Ichimoku Cloud. So just go along with the trend. Okay, so I got a little quiz for everyone. So you come back to me next week. I'll give you the answer. All right. A very simple look at the Euro Yen. This is taken today. All right. This is on the Euro Yen. This is on the other time frame. A very simple question. When does the Euro Yen start the uptrend? When does it start the uptrend? Right. I gave you 5 options: A, B, C, D, E. So is it A, is it B, is it C, is it D, is it E? You can take a screenshot, okay, and then we'll reveal the answer on Wednesday and also on Friday for those that missed out on Wednesday, but I'll reveal the answer on Wednesday. You got any questions to talk about Ichimoku Kinko Hyo, or especially Ichimoku Cloud in terms of how to use it before our next session, do come in on the Wednesday session. That way we can talk about it. Okay, so quiz for next week. using the Ichimoku Cloud. When does the euro yen starts the downtrend? Question 1. Question 2, when does it start the uptrend? Hey, downtrend. See, I can mudasar. That's a very good try, but it's actually a wrong answer. So yeah, take your time. I don't want your answer right now. Really don't want to have it right now. We want to leave it to the next session. We want to make it that, you know, people just come in on Wednesday and actually ask about what's really going on the webinar on Friday. Okay, so any questions for today? Don't worry too much about don't worry too much about the Tenkan and Kijuns. I will talk more about it. Okay, let me go through the questions. Even in basics, waiting for it. So, yep. Selamat Jumat, Sebastian. Have I been to Malaysia? Of course, many times, man. That's good. New. Okay. Can we use our multiple time frames together? Yeah, I mean, the way I look at it is this. So let's talk about the Aussie USD, for example. Makes things a little bit easier. Let me go into the daily time frame first. So the way I look at it is that on the Aussie USD on the daily time frame, it is below the Ichimoku Cloud, right? So even when price transition above the Ichimoku Cloud on the hourly time frame, I don't go long, because if you take a look at the statistics here, the risks every time it goes up and you trade it, it doesn't have that momentum to go against the major trend, right? If you go short on the Aussie USD, then the drop is much more significant, like this one here. Okay, if you were to trade up, it whipsaws a lot, right? Does that make sense? So I'm using the daily as kind of my guideline, right? I really don't want to break the trend, the current view of that trend. And then on the hourly time frame, I just look for short opportunities in the market, and that's why if you jump into my webinar every week, you know, I sound like a broken record, and I keep saying, you know, do not go against the US dollar. It just doesn't make sense as of yet, right? A lot of people got in a lot of pain, pretty much pre-CPI and the CPI. So yeah. Okay. Can we merge Ichimoku with divergence? Yes, by all means. You can, and I do that pretty much every day. Hey, Daniel. You want to be perfect on this? Let's go. So apparently there's a lot of requests. People asking for Nifty 50, people asking for sterling yen. How would I do one on sterling yen? Because a lot of people are gonna be asking me about sterling yen. All right, daily on the sterling yen. One thing to note: how thin that Ichimoku Cloud is. So with sterling, it is a little bit unique with the whole, you know, political situation there and the financial stability in the UK. But if you take a look at the sterling yen, this is Friday 28th of October to the 1st of November. So at the end of this month, if sterling yen remains at the current range, it's going to be a very, very high risk situation for the sterling yen. But because the fall on the Ichimoku Cloud, which basically forms a thin line within 2 days, is 520 points, there is a probability that the sterling could actually fall below within that range, 520 pips, and it would actually still be inside the Ichimoku Cloud. So think about it this way. That's what's really tough for the sterling. Anyway, with the sterling yen, you do need to take a look at it, because the condition with the sterling yen is that even though it flips-flops above and below the Ichimoku Cloud, there are obviously other components to this, if I were to bring it up, but it is considered to be range bound, and whatever noise that we have here post that drop from that UK mini budget. I think the whole UK mini budget and the Bank of England intervention, which they are going to intervene again pretty much right about now, there are more or less noises in the market. I think they are what we call a systematic risk. Okay, that is pretty much unavoidable and unpredictable. Okay, sterling yen on the hourly. If we take a look at sterling yen on the hourly, then we will know there's actually going to be a lot of support for sterling yen, especially around 164 to 163.50. That's basically the base of the Ichimoku Cloud, right? Now let's take a look at this one in comparison with, I'm not going to remove the lines, so bear with me, I need those lines. Let's say we have a little bit of retracement to the downside. We are anticipating that, support at the base of the Ichimoku Cloud at around 50%. So the worst case scenario for sterling yen is if it pulls back down below, if it pulls down lower, we actually have support at 164 and then 163.50. So we are looking at potential bounces once price gets back down there. If price gets back down there, because there's a lot of support on the sterling yen here. Yen is a completely different thing, right? Yen traders know this. They are in a completely different scenario compared to the US trading. Okay. Everyone is trying to answer it. Can we use Ichimoku and divergence? Yes, you can. Why use stochastic settings? I probably missed it in your previous. My settings are actually 14.55. So 14.55. Dollar yen, what is the indicator suggestions? I'm not sure that question. What this question means. After daily Ichimoku, should we also look at the 4-hourly Ichimoku before hourly? No. I don't look at the 4-hourly time frame Ichimoku because my trading strategy is really based on the daily and then looking for opportunities on the hourly time frame. I haven't put a lot of tests on using Ichimoku on the 4-hourly time frame, but based on the settings, based on the logic behind 26, it shouldn't apply to the 4-hourly time frame. It shouldn't, right? But can it be used? I think yes, it can be used on a 4-hourly time frame. Probably not as accurate, but whatever time frame it is, it's still gonna apply. And remember the sessions where we did the Renko and Kagi, right? Back then I said if you switch to a Renko or Kagi, it's actually going to change the Ichimoku Cloud. So let me just switch it to Renko. The Ichimoku change, right? The cloud changes. So if I go to Kagi, it changes again. So this is where the Ichimoku is unique because MACD is based on price calculation, but if we apply that, you can only typically apply those calculations based on traditional charting techniques, right? But if we combine it with those alternative Japanese charting methods, you're gonna get a whole different picture here. If you use Ichimoku and Kagi, Ichimoku and Renko, it's just gonna change things up. I'm not sure about the promo code for 100%. Someone was asking about that questions. Maybe Team Octa can help me out. 4 times 2600 for 4.3 days 1 week. Really pushing it. Okay, so we took examples on the Aussie USD, Aussie New Zealand, Pound New Zealand, Sterling Yen. So I think if there's anything regarding the session tonight, that you want to ask for instead of asking for examples on this, examples on that, because if we do that, we could just go on pretty much the whole night. No? Okay. So let me know if there's any questions. But I'll bring back the homework again. You can screenshot this if you want. Right, screenshot it. Quiz for next week using Ichimoku Cloud. I do not want to hear the answer. I'm not going to give you that answer right now. You can answer if you want to. Completely just going to ignore it. When does the Euro Yen starts the uptrend, the downtrend? That's question number 1. Is it going to be at point A, point B, point C, point D, point E? When does it start the uptrend? That's the question. The second question, which is at point A, B, C, D, or E. Okay. So this is super simple. I think this is the first time ever that I actually gave a quiz out. But I really want to encourage you to look at it and then come back on the Wednesday session or maybe the session next week. And if you have any questions regarding this session, you can always ask me those stuff. And especially with Ichimoku Kinko Hyo, really want you guys to just come in and just ask me. You know, it's not all the time everyone has access to me once a week, right? And you guys have that opportunity. Should be using that opportunity on Wednesday. How will we merge the HHHL concept with Ichimoku? We can talk about it on Wednesday, Suraf. I think we can use that as an example to take a look at on Wednesday. Let me just note it down. Okay. Right. So no questions. Looks like we can wrap it up for tonight. It's been a crazy week, and I know a lot of you guys are probably confused and tired. Can it be used on commodity? Yes. Telegram is in Indonesian. Few things can understand. I do post in 2 languages most of the time, and I'll keep doing that. I know I haven't been doing that for the past 2 weeks. I'm really sorry, but really constrained on time the past 2 weeks. But I will start posting bilingually as well. Okay. Can it be used in commodity? Yes, it can be used in commodity. I use it all the time with oil. You can use it on gold, but I'm just not a fan of gold, so I don't use that. Okay. All right. Crazy week. I think it's time we all had a little bit of a rest for the week. Good luck with your trades if you're still trading. Don't forget the Bank of England is going to buy back bonds for the last time. I think today is going to be the deadline for the intervention. So yeah, we'll see what happens. The equity market is still a little bit unclear, so just be careful. I think the market is still volatile. What the market did last night post CPI was a little bit confusing. Right, it does confuse a lot of people, but it's mainly triggered by a potential outlook of financial stability in the UK, and that's basically now down the drain unless something new comes up during this webinar session. But the latest news or rumors going around is that the Kwasi Kwarteng, his name, he just got fired from his position as a finance minister in the UK. All right. Thank you all. And any further questions, we can talk about it on Wednesday. All right. Have a super great weekend, everyone. See you soon.